Many people have been speculating whether the US economy will be in recession, and now this question may have an answer. Federal Reserve Chairman Jerome Powell said the Fed intends to continue its aggressive pace of interest rate hikes to curb inflation. He also admitted that it would be very difficult for the United States to achieve a soft landing. So what does it mean to make a soft landing very difficult? To put it simply, it has become impossible for the US economy to survive this inflationary crisis smoothly. Now let's discuss the topic of a hard landing for the US economy. Welcome to World Hotspot, where you will be able to learn about projects, cooperation around the world and important information about China. I hope you can subscribe to me. Let us discover more interesting things around the world together. As the chairman of the Federal Reserve, Powell's speech is very cautious. Under normal circumstances, he will not admit that the US economy is in danger. But now that he has said this, the economic situation in the United States is indeed serious. Let's analyze the headwinds facing the US economy from a different perspective. First, it started raising interest rates by 25 basis points in March last year, and then raised interest rates again by 50 basis points in May. Coupled with the tens of billions of dollars in balance sheet reduction plans every month, the Federal Reserve is implementing an aggressive policy of raising interest rates. This caused a large amount of dollars to flow back from the market into the US banking system, implying an overall tightening of the money supply. Although monetary tightening can curb inflation, one side effect is that it can slow the economy. After all, only sufficient funds can promote economic development. If the supply of funds shrinks, consumption decreases, and corporate income drops, how can the economic situation improve? Secondly, in the 2008 financial crisis, although there were no serious problems with the US economy itself, the collapse of the financial system directly led to the collapse of the entire United States. The collapse of the US stock market at that time directly affected the global market. China's A-share market also fell from 6124 points to 1664 points, causing huge losses to Chinese investors. After the US interest rate hike this time, the three major US stock indexes also fell significantly. The Dow Jones Index fell by 12%, the S&P Index fell by 17.54%, and the Nasdaq Index fell by 27.2%. You know, as the world's largest financial market, even a 1% to 2% decline is a big deal. Today, the Nasdaq is down 30% in a year, which is indeed a worrying situation. The instability of the stock market will inevitably have a negative impact on the real economy that relies on market financing. Finally, from 1960 to the present, the United States has experienced a total of 11 interest rate increases, but only 3 of them successfully achieved a soft landing, and the other 8 times were basically at the expense of economic recession. These 3 successful recessions were all due to the Federal Reserve decisively raising interest rates when inflation first appeared, ultimately curbing the inflation problem at a relatively small cost. Now, many former Fed officials are criticizing Powell's policies, saying he ignored inflation last year and raised interest rates too slowly. Therefore, with an inflation rate of up to 8.5%, it can be said to be very difficult for the United States to safely survive this predicament. At present, it seems that the possibility of a hard landing of the US economy is quite high, which makes many people worry about whether the situation in 2008 will be repeated. Will the world usher in a new round of economic crisis? First, due to concerns about the economic crisis, the International Monetary Fund has significantly lowered its global economic growth forecast. Initially, the IMF expected global GDP growth this year to be 4.1%, but due to concerns about US interest rate hikes and recession, they lowered the growth rate to 3.2%. The IMF's downward revision is quite large, which means that the IMF believes that the risk of an economic crisis in 2022 has increased significantly. Secondly, as the Federal Reserve continues to raise interest rates and US Treasury bond yields rise, global US dollars will flow back to the US, which creates the risk of dollar reflux to other countries. This risk will cause other countries' currencies to depreciate sharply, while the US dollar will appreciate strongly due to the return of capital. For example, China's RMB exchange rate was 6.30:1 US dollar in February this year, but with the US interest rate hikes in March and May, the RMB has depreciated to a maximum of 6.83:1 US dollar. Other currencies such as the Japanese yen and the euro are also depreciating sharply, and the currencies of some small countries have been hit hard. Countries such as Turkey, Lebanon, and Sri Lanka have already faced the tragedy of financial bankruptcy. Once these countries face risks due to exchange rate depreciation, a recurrence similar to the Asian financial crisis in 1997 or the South American debt crisis in the 1970s may occur. Finally, there was a massive oil crisis in the 1970s, which was triggered by a sharp rise in oil prices. Now, the Russia-Ukraine crisis provoked by the United States has kept global commodity prices, especially energy prices, at high levels. As of May 12, Brent crude oil prices soared to $107, and WTI crude oil prices were also as high as $106. In the natural gas sector, natural gas prices in Europe have risen sharply as Russia gradually reduces its gas supplies to Europe. Especially as the conflict between Russia and Ukraine continues, only one natural gas transit pipeline in Ukraine is currently operating normally, which has directly caused the price of European natural gas futures to rise by more than 20%. The surge in energy prices has caused huge losses to the European economy. If this energy crisis continues, it may lead to Europe falling into crisis before the United States. It now appears that even if the US economic recession cannot trigger a financial crisis, it will have a 100% impact on the global economy. As the largest country after the United States, China cannot stand idly by even if it faces an economic recession. So, how will China respond to a possible global economic recession? From the perspective of interest rate risk, although China is facing the impact of the return of US dollars. However, China's long-term good economic fundamentals and "me first" policy have given China a strong economic guarantee, thus effectively resisting the risks brought by interest rate increases. This means that despite the wave of US interest rate hikes, a large amount of foreign capital will still flow into China. Therefore, rumors of foreign capital withdrawal are not true, and the crisis caused by interest rate hikes will gradually end. In addition, China has the most complete industrial system in the world. Compared with 2008, China is no longer helpless in facing the economic crisis. Secondly, China has always emphasized the importance of internal circulation. With a huge market of 1.4 billion people and a GDP of 110 trillion, China has the ability to minimize the impact of the crisis on its own conditions. This US economic crisis happens to be a golden window period for China to recover and develop its economy. Therefore, China will rise to the challenge and seize the opportunity to narrow the gap with the United States and even surpass the United States. Only in this way can China no longer be subject to the policy making of the Federal Reserve in the future. Dear friends, this video ends here. What do you think of US dollar policy? Do you think the RMB can replace the US dollar? Welcome to leave a message in the comment area to share your thoughts and feelings. If you like the content of this issue, please recommend it to your friends so that more people can see this video. Thank you everyone for watching and supporting. See you next time.